Welcome to GlobalSigns. From Hong Kong, we'll be speaking with William Fong, a dynamic and seasoned 20-year stock market veteran. William is the head of Hong Kong China equities at Bearings. He is the manager of the flagship Bearings Hong Kong China Fund. William, thank you so much for joining us today.
Thank you, Bruce. Good afternoon.
As you've been a fund manager for many years, can you share with our viewers your stock picking strategies and investment themes?
I must say our investment process is mostly bottom-up. So our idea is mainly to collect a list of good stocks, and to define a good stock, that means those stocks can enjoy very strong growth, at least can last for 4 to 5 years, and with very good management team. And in the last few years, we also pay a lot of attention to the ESG, environmental, society, and also the governance. We believe with a focus on the ESG, we can further enhance our investment return.
William, what is your outlook for both the mainland Chinese and Hong Kong stock markets? After the strong rally of the market last year, in the beginning of this year, we saw a bit of profit taking, particularly for those high valuation companies. While if you look ahead for this year, the major risk or the major challenge of this market remains to be the monetary policy on both the U.S. and the Chinese economy, while the economy in China and also the rest of the world has been picking up. So there are some concern that there's no need to have such a loose monetary situation, so which may create some volatility in my view. Recently, there's a lot of interest in both the IT and financial sectors. What are your views on those sectors?
We continue to direct the IT sector. In China, actually, IT sector is very big. It consists of internet company, hardware, software, and also the data infrastructure. So that is the area that we like very much in China. But I think the concern for this sector is mainly the valuation. There are actually some companies, they don't have earnings in the near term. So when investors start to do the analysis or do the research on those companies, they will need to really look through the future to see whether the company can deliver good earning growth down the road in the long term. In terms of financial, we hold a relatively cautious view because within the financial sector, there are some banks in China, their earning growth is very low.
Now, how do you incorporate ESG into your stock analysis?
In terms of ESG, we have been practicing this framework since 2015. So it's been quite a long time, 5 to 6 years. For those companies with good ESG disclosure or good ESG kind of focus, we will tend to give them a higher target price. For all the companies we hold in the portfolio, from a bottom level, we derive a target price, and ESG is fully incorporated in the calculation of our target value of individual companies.
How will U.S.-China relations under the Biden administration affect investors investing in the Hong Kong-China stock market?
The thing is that the U.S.-China geopolitical tension is not a new challenge for us. It has been in the market for many years. If investors can remember in 2018, there are a lot of concern about the trade war between the U.S. and China. There are big amounts of tariffs being put to the Chinese exports. But yet, if you look at the Chinese stock market, it hasn't been really affected by this challenge. So in my view, the U.S.-China tension may stay for a while. And in terms of solving the conflicts between the two countries, it may take some time. But other than that, we still see a lot of companies, actually, they don't really affected by the situation. What we are saying is for the companies that is focused in domestic China, they are still facing huge market potential for them to grow their business.
Finally, William, can you recommend promising sectors to our viewers?
And actually, if you look at the overall Chinese, Hong Kong and China stock markets, you can find a lot of companies that can deliver good growth, which will also fulfill our investment philosophy or investment strategy. But the thing is that if you look at the number of stocks, there are many, many companies within the universe of the Hong Kong, China. So how can an investor pick the right companies in such a big universe? It is very difficult.
But in my view, if for a retail investor, they don't really have time to study the stock market very thoroughly, I would suggest to focus in those companies that can produce good quality service. Why service? Is because with the growth of the Chinese economy, the overall living standard of many Chinese consumers will continue to go up. And what they are demanding is actually not basic goods, but instead is better quality service. And that's why we like the service industry so much. Some of the sectors, like the healthcare, education, online service, and entertainment, those areas we continue to see very strong growth in the coming 5 years.
William Fong, seasoned and dynamic fund manager at Bearings, thank you so much for being with us today.
Thank you very much.
Thank you. That does it for us this week. Thank you so much for being with us. Until next week, please be safe and healthy.